Hello again and welcome back to the Money Control live stream. You're watching Markets with Santo and CJ. And well, what a strong day for the bulls. We started off on the front foot and we have remained on the front foot throughout the session. If you look at the Nifty and Sensex, they have risen quite consistently on the back of very positive global cues at this point of time. It looks like we are going to end on the positive note for the third consecutive session, so that is a pretty good sign. If you look at the leaders, IT, FMCG, banks are the main sectors that are leading the bulls at this point of time on Dalal Street. And the major story behind all of these gains remains the US dollar. The weakness in the US dollar index that we are seeing for the past 2 to 3 sessions is driving a lot of risk-on rally across the globe. You talk about Asia, you talk about Europe, and of course India. So clearly, Santo, things are looking up a little bit.
The momentum is clearly with the bulls at this point, and if the Nifty sustains above 16,500, probably you could also have another set of disbelievers jumping into the fray.
Last week we were saying that 16,200 would be a difficult hurdle to pass, and in 2-3 days we have already above 500.
It will be interesting to see what happens in the option market, because a lot of calls had been written around 16.
Absolutely.
Maximum call outstanding
I
was
think
around
probably
16,000.
this is what is driving. I think given the fact that nobody expected that 16,200 hurdle to be crossed so easily, I think probably that is triggering a second layer of buying or covering from call writers over the past week. And I think probably it will be interesting to see whether FIIs are also net buyers today. The way the momentum is, the way the volumes are at this point of time, it just seems to me, I just get this eerie feeling that probably FPIs are net buyers in today's session as well. Well, that said, I think we should quickly move on to some of the specific stocks that were on our radar, Santo, today.
Yes, Oil India, great comeback by the stock today. It has been in the limelight for about last 3 weeks.
Yes.
It's taken quite a bit of a beating, but I think buyers are now slowly coming back to the counter, and the reason is the government revising downwards the cess on exports. Now, CJ, at this point, valuations clearly are in favor of Oil India. Stock has seen a huge fall. You're getting it at less than book. Oil prices are likely to, among all commodity prices, oil prices still are likely to stay firm. At least that is seems to be the general view at this point in time. So previously, Oil India's realizations seem to be factoring crude at almost 45. Now, because of this export tax, probably it would have gone up a little bit, but nevertheless, they're still going to make money. Most importantly, the sentiment for refiners has changed a bit, and you could perhaps see Oil India build on its gains.
I think, Santo, though, incrementally the reduction in the windfall gains tax, or the special excise duty that the government had imposed on crude oil production, it's an incremental positive, but we should not forget that it still is there hanging over their head, right? At this point of time, it has come down from about 23,000 rupees per ton to about 17,000 rupees per ton, but it's clearly there, and most, ideally you would not want it to be there. If it had not been there, you would have a clear run at probably a very good quarterly numbers for the coming quarters, but I think that uncertainty will probably continue to limit upside going ahead. And the other thing that I feel, with what has happened with Oil India and as well as with ONGC, this, and this is an old story with PSU. I mean, you would be more familiar with it. Whenever things start looking better, there is something or the other that happens. Either it is government intervention or either it is a big stake sale from the government, and that ends up pricking the bubble. I think retail investors would be a little wary now with this sort of an intervention and the sort of correction or the loss they had to take on their bets on Oil India and ONGC. I think it could probably miff a retail investor a little bit, and therefore any sharp upswings would be a little limited.
It still looks like a strategic bet at this point in time, but also remember there's also the capex expansion, which is probably one of the other triggers for that. Its refining capacity will go up from 3 million tons to 4 million tons by the end of the year.
Let's see whether that works out or not, because refining margins, if I tell you, they are not looking very pretty in Europe and Singapore at this point of time. So there has been quite a sharp decline in refining margins, even though, as you mentioned, crude oil prices have still remained above the $105 per barrel handle. That said, the one stock on my radar, Santo, was Stylam Industries. Well, what a blockbuster set of Q1 numbers the company has given. It was showing positive momentum before the Q1 numbers. Probably the market had a clue or a drift that possibly the numbers are going to be quite strong. And if you look at the Q1 net profit, higher by about 51%, revenues rose about 80%, and while margins declined quite substantially on a year-on-year basis, I think operating profit was still showing a more than 30% growth, Santo. So clearly the numbers seem quite well Of course, there is a caveat here that the year ago quarter was, not that great for anybody out there in India, so you have to take it with a pinch of salt. But overall, the momentum of earnings looks quite good. And from a longer term perspective, I am just, I was just quite happy to look, when I was looking through a shareholding pattern, I realized that Sunil Singhania is one of the shareholders in the company. He had recently made an entry on the stock, so it seems like even smart money is betting on this company.
Well, Stylam, there's been an increase in overall institutional interest in the stock during the June quarter, no doubting that. The earnings momentum is also there, quite a good jump in the June quarter earnings. And overall, if you look at the balance sheet also, it's managed to trim down its debt quite a bit.
Yeah, I think one of those companies which have utilized the COVID pandemic.
Yeah, so at this point, more or less everything seems to be in favor of the stock. So I won't really nitpick with you on that.
Well, what's your second pick, Santo?
Vedanta, now a good strong dividend yield play. So far this year, 51 rupees of dividend. Now some may argue that it's a promoter probably trying to take.
Well, Santo, just for our audience, that is 19,000 crores of dividend, and we are only in July. We are only in July, and 19,000 crores of dividend has been paid out by the company.
Already. That's again steep correction in the stock over the last month or so. Because of the overall bearish outlook towards commodity stocks. But if you look at individually each of the segments that Vedanta is present in, be it aluminium, zinc or crude, the prices are likely to be at least stable, if not rally very sharply. In the case of crude, at least you would say that the prices are likely to remain slightly higher. Zinc seems to be a bit of a weak spot though. Aluminium, again you've seen a sharp drop from the highs of March, but again the outlook there is not as bearish as it is for zinc.
Right.
So this is, I think these are some of the factors which probably could be leading buyers to queue back at the counter.
I think, Santo, when it comes to Vedanta, of course, making a strategic bet on Vedanta has always been a fool's game, because you don't know what sort of new surprises can come up. Trading wise, yes, probably in the near term the stock might make a lot of sense, but from a qualitative perspective, I have a few concerns, especially the big debt overhang that is hanging over his promoter. I think that itself is a big question mark for a lot of institutional investors, leave alone retail investors, that how they tackle that debt overhang, because let's not forget, back in 2020 they borrowed a large sum of money to delist the company. That delisting never went through, and now they are sitting on a lot of this debt that they need to probably refinance, and if they were to refinance it, they will have to pay higher interest rate, because we all know that globally interest rates have gone up. So clearly that question remains a big issue. And apart from that, of course, historically there have been corporate governance issues with respect to Vedanta, and also now with the fall in commodity prices, Santo, it just seems like with the way recession concerns are being talked about, I don't see a major upside. We might see some pullback in commodity prices, but at this time they seem to be lower on a sequential basis.
Well, the company is also working on reducing its debt, a significant reduction there in debt, and overall, this EBITDA to net debt now stands at 0.5%, which is the lowest in almost 5 years.
Yeah, I think company is fine, Santo. I don't think I have doubts about where Vedanta as an entity stands. I think the question mark is about the promoters' debt levels and whether how much they will start milking Vedanta, because see, we are already seeing very good dividend payouts. Of course, it seems very nice and all, but let's not forget that a good part of it is going to go to the promoter, which is most likely to utilize it to pay off as much debt as possible. Maybe in the long term that is a good thing, but we will have to see whether that caps the upside of the stock in the near term. Well, another stock where the picture is not looking very great today after the recent developments is Gujarat Gas. Santo here has been quite bullish on this counter for quite some time, but CNBC earlier today reported that the Morbi industrial area, which accounts for almost 50% of the volumes for Gujarat Gas, is likely to see a shutdown for at least a month from here on, largely because there has been a demand slowdown, as well as the high gas prices have made it, the operational costs have also gone up quite considerably. So clearly, if this region sees a shutdown for at least as long as a month, then you are basically betting on a very, very weak Q2 numbers for the company. We already know that volumes have taken a hit overall because high natural gas prices have made PNG prices quite expensive, and customers are definitely cutting down on that. So I think this is one stock that people should keep an eye out on, probably from a short bearish perspective going ahead.
I would just look at the price. Probably, yes, no doubt, the development is very clearly negative, and it's one of the key areas for Gujarat, key markets for Gujarat Gas, and if there's a shutdown clearly that is going to affect demand. But look at it this way, CJ, the stock has not reacted at all to the development. In fact, it is up close to about 2%. So, which leads me to think that probably again the market may have already factored in the worst. You saw that when the stock crashed all the way from about 550 odd to just about 400 rupees earlier this month. So, a lot of the negatives to that extent have been factored in. Maybe here on the key trigger for Gujarat Gas would be the easing of spot LNG prices, and that I think could lead to at least the prices stabilizing around these levels, if not a major re-rating.
Well, Santo, I mean, we can clearly see the stock has come off considerably from today's highs. I think probably you will only see in the coming days whether market factors this news in or has already factored that in, or whether today's rise is just probably it's rising in tandem with what we are seeing in the mid and small cap space today. That said, Santo, your last stock.
Rallis India. Now the numbers have not been all that great if you look at the bottom line level. But here's the good part to it is that top line wise, top line wise, there's been actually a growth both quarter on quarter as well as year on year. And let's not forget the fact that even though there's a year on year drop in margins, but the company has still managed to control costs and maintain margins at about 13%, which is the second highest in the last 8 quarters. Okay. The company is doing a fair bit of cost control there. And lastly, I think agrochemicals, the outlook clearly is positive, at least in the near term. You have the problem in the form of higher input costs, which is what led to the compression of both operating profit as well as net profit. But that again is likely to be transient, and once you overcome that, you're looking at good strong numbers at the bottom line level.
Well, Santo, of course, the bulls will be hoping that this is the worst of the the pain on the margin side for the company. But let's see how that develops, because clearly cost inflation is something that has been bothering Rallis India for quite some time, and I think probably compared to its peers, Rallis has lagged behind in terms of cost control. So let's see. I mean, for me, that weak operational performance was just not building confidence in the stock, if I can put it like that. And as far as demand is concerned, of course, the top line growth has happened, but we also need to factor in how much of it is driven by price and volumes, right? Because crop sowing in this season of so far has actually been down on a year-on-year basis, especially for some of the bigger crops like paddy. So I would be a little skeptical on how the demand situation is developing at this point of time, and only probably the second quarter numbers will be able to give us an insight. And I think till then probably it's better to steer clear of the stock, because you can find better bets in the agrochemical space than Rallis India.
Well, a quick look at the key indices here. Sensex is still up about over 640 points. Nifty is also been pretty slightly off the day's high, but still very much, very much.
I mean, it's very expected. I mean, you will expect a few of the people to start taking some bit of a profit, because we have seen almost 3 days of gain on the indices. So we are coming off day's highs, but at least we are still holding above the 1% mark, and on the Nifty at least above the 16,500 mark, which will prove to be quite crucial. If you look at some of the gainers, Santo, the top gainers at this point of time, clearly ONGC higher by about 4% because of that reduction in windfall gains tax. You have Tech Mahindra higher by about 4% again, and HCL Tech, TCS and Reliance. So a lot of major index heavyweights are actually moving today, and that is why we have seen the sort of greenery that we are seeing today.
Clearly the focus will continue to be on earnings for the next 3 weeks at least. And
yes,
so CJ, which are the major ones that we should be looking at?
Well, Santo, there are no Nifty earnings tomorrow. We have to wait and see. I think IndusInd Bank earnings have not come in so far, so probably later in the evening when the numbers come out, we will be reacting to that tomorrow morning. But apart from that, in the mid-cap space and the non-Nifty space, there are a few big names such as SRF, PVR and RBL Bank, the 3 stocks that I'll be looking out for. They'll be reporting.
In particular, I'm sure it will be PVR and also
SRF as well. I mean, last quarter, the numbers that the surprising numbers that they put out, it really turned the story around for SRF, given the sort of correction that it had seen. Another quarter, if you add another quarter of earnings performance like that, you could be probably turning a lot of skeptics like you into bulls. So let's see whether SRF can do that, whether SRF can convince Santo finally that it is a stock for the long term.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks as always for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m.